Good morning, everybody. Welcome to today's 1 million by 1 million strategy roundtable for entrepreneurs. 1M by 1M, as you know, is the first and only global virtual accelerator for technology startups in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. In support of that mission, we do these free mentoring roundtables week after week after week. This is the 691st roundtable, free roundtable. We also have premium roundtables in the program, in the premium program. So this mode of talking to people around the world about their businesses and brainstorming about their strategy has now been very successful over a very long time. We started back in 2008 doing these sessions, and we've learned a lot. Today, we're going to start the conversation with David Evans from Sentiero Ventures. David, if you could please unmute your line and tell us what Sentiero Ventures is doing, that would be great.
Awesome. Well, thank you for having me, Samana. Really appreciate the opportunity and really love what you're doing with 1 by 1 million. I'm the managing partner at Sentiero Ventures. We are an early seed stage venture fund focused on AI-enabled B2B vertical software. We've been investing in AI since before it was cool, and I've worked in AI since long from the gray hair.
So tell me more about what, before the venture firm, when you said you worked in AI, what kind of AI did you work in?
So I started my career in AI building predictive models for NASA in the late 90s. So we were predicting whether there would be enough components of the spacesuit available for the spacewalks associated with putting up the International Space Station. But the ultimate irony is we're talking about the space station coming down now. I was part of putting it up in the late 90s.
All right. And how big is Sentiero Ventures fund size?
So we're a $15 million fund too right now.
Okay. And what check sizes do you like to write?
So we typically invest anywhere from $250 to $750 per investment, and total allocation for any individual deal is somewhere between $1 million to $1.5 million.
And you said B2B is your focus, yes?
Everything we do is B2B, generally verticalized software.
Generally verticalized software, okay. And define seed for me. You said your seed stage. Define seed for me. What do you want to see in the seed deal that you would feel comfortable writing checks for?
Absolutely. We're a little bit of a tweener. We're kind of a late pre-seed or an early seed. So for us, we don't have any minimums in terms of revenue, but we want to see a company with a full product ready and some proof of market. So generally speaking, it's going to be the early signs of market traction. So you're starting to get user adoption, you're starting to get paying customers, enterprise software, you've got your first couple pilots with enterprise organizations, but we're not a true seed fund that says, don't talk to us until you've got $500,000 in revenue. We'll invest, we've made investments everywhere from zero revenue and simply pilots with enterprises all the way up to 2 million plus in annualized revenue.
Okay. Now, I'm going to focus the conversation on what you're doing in AI, your AI investment thesis, but just because you talked about your stage in quite a bit of granularity, there's a question that I want to ask that is very contemporary, and I think it is on a lot of minds right now. You know, there is this vibe coding and no-code Cursor and Lovable and all these products, all these apps through which you can get an MVP out fairly quickly. And especially in vertical B2B and also in B2C these days, there's a lot of this going on. The MVP development, very rapid MVP development and getting it out there in the hands of customers is really accelerating. What are you seeing and what is your point of view about this phenomenon?
So I think it's really something that we've seen for a long time, right? The speed and pace to MVP or concept just keeps getting faster and faster, right?
Yeah.
You know, saw a lot of low-code tools where you could use Webflow or Airtable to build an early proof of concept, to be able to get in front of customers. The challenge that we see, or the thing that we see that hasn't really changed, especially in vertical B2B software, is that there's still a good 18 months between conception to complete product, right? To sort of characterize as minimum sellable product. And it's a key distinction, right? MVP is minimum viable. It's the minimum that you can put in front of someone. Minimum sellable is the thing that is the minimum amount of features, functionality, workflow, and user interface that's required to actually start to develop repeatable sales. And it still takes about 18 months, right? Because one of the things—
Not anymore. That's what the question is. If you look at what's happening in the market right now, there are companies that are going— I mean, there is a product that was built on Lovable, and in 48 hours, it went to 3 million ARR. And, you know, obviously they're using some no-code tool that obviously there's enough functionality for people to want to pay. Now, the question mark still is around how stable is this product? How, you know, is this the final product? It may have to be rewritten. It may have to be rebuilt, re-architected. There are lots of question marks, but it's no longer— minimum sellable product is not 18 months away anymore, is what I'm seeing.
In B2B software, I would argue that it's still the 18 months, because the exact point that you just raised is how stable is it, how reliable is it, to actually get to the point where you can sell into the enterprise, to sell into the middle market. You're asking people to take a risk on how they change their workflows, on what they buy off on software. So you still have a time period where you need to bake in all of the underlying questions, because we all find this as entrepreneurs, right? Like that, the MVP, part of the reason why lean startup became such a really big trend in early stage software is because, you know, your view of the world, even if you know the problem you're solving, you know it intimately well, you always have a narrow lens on that problem. Until you put it in front of customers, and multiple customers, you're going to learn new things about how the product works. So we can iterate more quickly, right? But it's still going to take us time to get to that 8 to 10 customers that give us a broad enough diversity of opinions and broad enough diversity of feedback to be able to sort of fully get to the point of where I have what I would consider a truly commercializable product, and not just catching lightning in a bottle, catching experimental budgets or speculative budgets.
Yes, your point is well taken, but I think for proof of concepts and stuff that gets the conversation going for larger deals, this is a very interesting trend that is happening, including paid POCs and paid demo projects, paid test projects.
Oh, absolutely. And it's one of those, it makes it easier to get started, but I think what we're also seeing as investors is we're going to start to see the bar get raised in overall functionality, right? Is, you know, the demands on what the software does and what the tool does is going to sort of get proportionally raised. Because,
yeah, which is the question about what should be, you know, venture funded, because there's the counterpoint, the other side of the fast build point is that copycats abound, right? If there are too many copycats, that's not conducive to venture capital funding. But there comes the question: where is the exit barrier? Where is the, you know, where are the integrations that are going to create deeper, you know, longevity within the account, and not quick flip into another product, a cheaper product, etc. So good. This is the discussion I wanted to have. Before we dive into AI, my other question about your fund is, what is your geographical preference in what you want to fund?
Sure. We invest exclusively in the US and Canada.
But all over the US and Canada, not regional?
No, we're anywhere in the US and Canada. It's really just a matter of, given the size of our fund, we look to mitigate cross-border risk and currency risk as much as we possibly can.
And where are you located?
We're based out of Dallas, Texas, but I do have one of my partners is based in the Bay Area.
Okay. All right. Tell me about your AI investment thesis.
So for us, and to kind of build on something you said in terms of how do you get sticky, how do you know what to invest in? Generally speaking, we're looking for companies that really meet, call it, two criteria. One is unilateral, and that is AI is core to the value proposition. So if you just have a button that says click here to do something AI, we're really not interested, right? Like the AI features are table stakes. And the way I describe it is Uber is a mobile company, right? If you take away the mobile app, Uber no longer exists. Amazon is an e-commerce company with a mobile app. If you take away the mobile app, Amazon still continues to do business. They can still continue to exist. They're not a mobile first company like Uber. So for us as investors, we are looking for companies, to extend the analogy, we're looking for companies where AI is to that company the same way mobile is to. If you take AI out of the equation, there is no company left. Great example of that is one of our companies, ScaleStack. They have no user interface. It's a pure agentic solution that works in the background and works with the existing tools and products that company already works with. But there is no user interface. Nobody logs into ScaleStack to do anything. It's pure AI. It's pure agentic backend. The second thing we look for is really one of two things. It's either do you have a data moat or do you have an algorithmic moat? And that's how you stay sticky. And to answer that question you sort of posed a minute ago is that's how you have long-term longevity, and you avoid you don't avoid the copycats, but you mitigate the incidents. If you have some data set that doesn't exist anywhere, or if you have some level of algorithmic structure or workflow that doesn't exist or is incredibly difficult to replicate. So those are really kind of the two things. Are you AI first and AI native? Well, and do you have a data or algorithmic moat over your competition?
So let's double click down on some of the investments you have made that fit these specs, so to speak.
Yeah, absolutely. So one of the examples on a data moat is a company by the name of SingleKey. It's actually from our first fund. SingleKey works with independent landlords to do background screening, rent collection, and ensuring and having a unique insurance product that if a tenant breaks the lease or needs to be evicted, they insure against the losses in continuation with it. What SingleKey now has is, because of that process that they facilitate, they know what the characteristics of a tenant were when they applied to rent an apartment. They know when they paid. They know if they needed to be evicted, and they know if they broke their lease. Right. So that data set doesn't exist anywhere else for independent tenants. That's what you can call a data moat. They've been doing this now for nearly 5 years. So you've got 5 years worth of data that even somebody coming into the market new, you don't have that longitudinal data. You don't have the different economic backdrops. That's a company with a data moat. When we talk about an algorithmic moat, we have a company called Geminis. And what Geminis does is, in training machine learning models, they incorporate both the laws of physics as well as the data, right? And they've got a proprietary approach to utilize those two things together to require less data and less compute time to achieve not only equivalent results, but better results than you would with just the data alone. So those are two examples of companies in the portfolio that kind of fit each one of those buckets that I described.
And what are you looking for if you were to project out? What excites you? What kind of things? What trends are you monitoring that you would like to see deal flow around?
So I think one of the things that we're most excited about is something that started most recently, is what we characterize as service as software. So where rather than making people readopt a new piece of software to do a thing, just let them continue to do things the way they used to do it. And you, as the startup, are responsible for creating the transparency. You create the opacity on the back end, right? Don't make somebody adopt a piece of software, to do a thing. You can just offer that as a service, and whether it's being automated via AI or whether it's whether you've got humans in the loop dealing with it, that's on you as the startup to ensure that you have the proper handling on the back end. The customer just pays for legal services. They pay for freight scheduling. They pay for tech support, and it's on you as a startup. And I think similar with that ties into another trend that we're looking at that I'm most excited about personally is really rethinking the user experience of software, right? It's not going to all be chat buttons and chat boxes, really rethinking the utility of software and companies that start to rethink how should CRM actually work, right? How should ERP systems actually work? Not just adding new buttons to the existing technology, but rethinking the way that we should interact with machines as we end up in kind of this new era of AI.
So, for the last couple of years that we've been having these conversations, let's say roughly with the high adoption of ChatGPT and then all the competitors that have flooded the market, et cetera, in the venture circles, especially your lane, the B2B lane, vertical B2B lane, most of the VCs are talking about human in the loop. That's what they're seeing in the customers. That's what they're designing, their portfolio companies are designing for. So I would say if I were to kind of synthesize my last 2 years of these conversations, human in the loop dominates those conversations. And your point about service companies, AI services companies, there is a phenomenon, with the cloud computing, the software as a service movement was do it yourself. Software companies were selling software as a service, which customers were using. And now the service as software, let's say, it's not exactly software, but if you're selling pure services, that's do it for me. That's no longer DIY, that is DIFM. And that's also, I think, is coming up in a lot of the vertical B2B solutions. That is coming up quite a lot. My question to you is, and my own perspective has actually shifted a little bit after 2 years. In the last 2 years, I have also been more or less in the human in the loop mode. And I think for the next 3-4 years, it's still probably going to be human in the loop. But there are more and more conversations I'm having and hearing more and more people talk about the immense development and immense progress in AGI that removes the human from the loop. And agentic AI is just the architectural movement in this direction, but there is a broader tsunami coming somewhere down the road. We don't exactly know when it's coming, but there is, this software company that Mira Murati, the founder of, founder CTO of OpenAI, has started and raised $2 billion. They're going after AGI. OpenAI itself is going after AGI. The AGI is starting to become more present in the conversations, and I don't think it's ready. I don't think it will be ready immediately, but it's probably not that far away, and that is going to change the game substantially. So when you're investing, how are you thinking about this looming possibility?
I mean, I tend to take a little bit more skeptical view of where we're at in the life cycle of development of AGI. I look at, because we make this immediate leap that the current architecture of LLMs is a precursor to AGI. And I don't know if that's really the case. Most of the literature and research that I've read is that we need to sort of start fresh, we need to start clean. And that's part of the reason why companies like Thinking Machines have raised so much money, right? Is that we can't just take what we already have and build on top of it. If that was the case, you would just see OpenAI and Anthropic and others continue to build on top of it. But I think the longer tail, if you think about AGI, is it's really to some extent the same with LLMs. It starts to make tools and processes scalable that haven't been scalable in the past, right? They've always been sort of resource constrained or resource bound by the capacity of how many human beings we have. And generally speaking, across the globe, we're actually on a downward trend in terms of the number of humans, right? Like we're in most of the developed world, we're below the population replacement rate. We don't have enough people to do the work. So I think when you take a view of abundance on where the market goes, and you take a sort of positive view of what AGI could do, is it just reshapes the complexion of what work is. It reshapes the complexion of what services are available based on where you're at in the market, right? And how scalably we can do that. And one of the things that we get excited about just with the current state of AI, right? When we talk about that service and software, you can now start to deliver, tools and services that were only available for large companies are increasingly going to become available to smaller and smaller companies, just because we have the scalability that I couldn't serve a small company before because it just wasn't profitable. But if I can automate 98% of the interaction with that small enterprise, I can now take them on as customers and now become an opportunity. And that is an active dialogue with a lot of our portfolio companies, right? It's like, what does that down market scale look like? When we do market sizing calculations, you look at what part of the market is going to start to become accessible that 5 years ago never would have been accessible. So I think when you look at it through the lens of a positive sum, that AGI future, a lot of the nature of work is going to change, but I don't think it's going to be, completely supplanting what we do as human beings.
So I'll give you my take on this. There is a school of thought that is that there will be no work. In a complete AGI world, there will be no work. So that is a school of thought, and that school of thought is also quite fleshed out. But the way I was thinking about the development of AGI is the emphasis has been on language, right? The huge, highly accelerated progress that has happened has been on LLMs and language. And in vertical AI, we see a lot of small language models doing actually much better work, less hallucination, less cost, and still providing tremendously effective automation and value. But there are other ways human beings learn. There's visual learning. There is auditory learning. There's smell. And I just recently read about a robot in Brazil that is harvesting fruits by smelling with sensors the ripeness factor. This is a good example of starting to bring in more of the 5 sense learning as opposed to this only language, only one-dimensional learning that is not complete as far as how humans learn. So I think in terms of the development of learning models in general, there's still a lot of ground to cover, but it's not impossible that ground will be covered. To your point about accessibility, absolutely. You talked about the developed world that lacks people who can do certain things and enabling them to do certain things with AI or robots. That's one angle to it. There's also the developing world. Africa population is exploding. Indian population still is very high. It is starting to go down, but it's still a very, very large population and very large unemployment. These countries have very, very large unemployment. Even in China, even though population decline has started, it is still a very large population and very, very large unemployment. So for the foreseeable future, if you look at this coming decade or 2 decades, 3 decades, we're talking about, this is not a window in which the world population shrinks to a much smaller level. So I think there is, the positive side of it is everything becomes more available to people who couldn't afford it more. Medicine, healthcare, education. These are the great positives of the AI revolution. I think one of the things I'm very, very bullish about is AI personalized tutoring, which can really impact education, and personalized healthcare at scale, robotic surgery, and all of this. This stuff is really, really exciting and fully additive. There is absolutely no con to this. This is like complete pro. There's no con to it. But then there are other questions that would emerge through this process is, what do we educate people for? For the children who are not yet in a mature phase of life, just getting born or in elementary school, middle school, even high school, who are going to be stepping into a world that has a very different configuration vis-a-vis work. What do you train them for? This is a question that is unclear at this point. I'll let you weigh in, David.
It's absolutely something I think about very, very frequently. I've got a 12-year-old and a 9-year-old, and I think the benefit that I have is that my kids still have, call it 8+ years or more, kind of under my umbrella, right? And I think a lot of the question marks of what is the labor market going to look like, what are jobs, like even I built my career as a software developer, sort of coding at 14. I got my first job in tech at 19. My kids are likely not going to be able to follow the same pathway because I got hired in the middle of the .com bubble because they just needed a body to throw at writing code. Well, right now that's cursor, right? Like you need to scale the number of bodies that you have churning out code. Well, kind of do that with agents via Cursor and Replit and other sort of coding tools. I generally look at it and say, but at the end of the day, the core piece is there's still somebody that needs to be providing the guidance, that needs to be providing the requirements and trying to get the context of the software. So when I think about it in terms of my kids and the things that they need to learn, I mean, not naturally they need to learn the basics. You still need to know how to read and write and math, computer science from a fundamental perspective. But they still, the piece that's missing from the education system that we need to try to provide as parents right now is the contextual understanding, right? Like I learned to be a senior level engineer to be able to analyze requirements and manage teams and manage broader context and architecture. I learned that by churning out code for the first 3 years of my career. My kids, if they choose to go into technology, are not going to churn out code for the first 3 years. We need to find ways as parents, but also as an education system, to start to replicate some of those experiences so that they're job ready when they get.
Yes, I think the education system will have to go through a significant change to adapt to this new world.
Absolutely.
All right. Well, very interesting conversation, David. Are you staying for the entrepreneur pitches?
I didn't realize there was a pitch, but
you're welcome to. If you'd like to stay, you don't have to stay. It's up to you. We have 3 pitches, so I'm going to switch to that mode. Folks, this is a safe working session. You don't need to be nervous or defensive, or this is not Shark Tank. I'm not going to try to, be nasty and snarky and all of that. I'm not trying to entertain people. I'm trying to work with you. So just treat it as such. And if you don't agree with what I'm going to tell you, that's up to you, really. It's your venture. It's your prerogative to do whatever you want with it. So we're going to start with Parshavv Jain from Ontario, Canada. Espotz is the company. Parshavv, please unmute your line and let's get started.
Hey, good morning, all. This is Parshavv. I'm the founder of Espotz. So what we are solving a problem in is democratizing esports, opening up the floodgates for the 600 million competitive players using leveraging AI and blockchain. It's a B2B2C. So the model over here is, so can I change the slide or?
Yeah, you just tell us when you want the slides advanced and we will advance the slides.
So we are building a product at the intersection of esports, staking, and Web3. And put together on the next slide, you can see the market size is going to be addressable market size is $5 billion, which we can obtain in the next over a period of 10 years. How we are going to do that?
Is it a bottom-up market size or top-down market size?
Bottom down. Because
Bottom
as
down
of now,
is
if you
not a category, either it's bottom-up or top-down.
Bottom up.
It is a bottom-up?
Yeah.
So what is
Because
your
as of
business
now,
model?
Yeah, as of now, the esports is very much controlled and dominated by the top 1% elite teams and leagues.
No. I'm asking for a bottom-up TAM analysis. Is that what this is? No, it's not.
It's not.
It's not. Okay, so you need to, if you start a conversation with market size, that conversation needs to be pinned in bottom-up TAM. And that's not what this is. So let's start with something more base, fundamental. What are you doing? What is the value proposition and for whom?
So we are creating a esports platform for tier 2 operators who have access to the great teams and great players who can do amazing tournaments, but they don't have access to the brands to sponsor their tournaments or monetize their tournaments. That's where.
So what is this? Is it a marketplace?
It's a platform, I will say, in which is at an intersection of esports tournaments, betting and staking, and Web3, leveraging Web3 industry or technology.
So go back to my question about business model. What business model are you following? How do you make money? How does the platform make money?
Every ticket gets sold on the platform for staking for as an entry ticket. We charge a commission from the fans for participating in the matches and betting.
Okay, so it's a ticket selling. Ticket selling is your e-commerce is your primary business model.
As compared, yeah. You can compare to e-commerce, but yeah, it's not e-commerce per se.
It falls in the e-commerce category. Ticket selling it falls in the e-commerce category.
Okay, maybe, yes.
So when you present this market size, you're going to need to really present it in terms of how many tickets can be sold on your platform.
Okay.
That's bottom-up TAM. So that means you need to segment the market and figure out what, how does this business get built, essentially. And I think, wait, just listening to you a little bit, it sounds to me that this is not a pure retail e-commerce of ticket selling. I think if you're talking about bringing brands onto the platform for sponsoring tournaments and so forth, it sounds like you're also going to have to build a two-sided marketplace for connecting tournament organizers and brands. Isn't that correct?
Absolutely correct. Because as of now, like Lamborghini have access to the ESL, who are the largest esports companies, so they can carry out the tournaments at a large scale. But if there is a D2C brand, a regional brand who wants to carry out a tournament, they don't know how to tap into that industry, which is like a new tech savvy or a gamers or new next Gen Z generation.
Yeah.
So they don't have access, they don't know how to reach out to them. So
what
that's
is
one of the fan engagement.
What is your starting point? What is the business that you want to start with?
So we are creating this esports platform where people can come and create tournaments. So one tournament operator for any game, they have a user base or a player base of 1,000 minimum on their Discord servers, and those 1,000 players have a fan base put together of 10,000 on an average. So that's where the chain reaction or chain effect is there to onboard or as a GTM strategy. So we onboard one tournament operator who can carry out wonderful tournaments, who can have access to the teams, players, and those players can bring their fans. So that's the ecosystem which we are building.
And what is it? All sports?
It's mainly, as of now, we are starting with the esports video games like Dota, Counter-Strike, Fortnite, League of
I see.
Legends.
I see. Okay.
Yeah, so the earlier generation of our age group was more into sports and sports betting. Now the next generation is going towards esports.
Yeah,
More and
there's a
more
whole
children and
category. Yeah. Okay.
yes.
All right. So tell me what brings you here? What are your questions and so on?
So I'm here to pitch and like would like to get some feedback and maybe to know maybe some interesting point of view if I can get from you or the
The
field.
pitch has problems. The pitch needs to be, if you're, what pitch is this? Is this a pitch that you're creating for tournament organizers who are your customers potentially?
No, it's for the investors.
It's for the investors. So if it's an investor pitch, this doesn't work because it doesn't explain the business very well. I've asked you some questions and I'm starting to extract what that business is, because you're gonna have to decide on where does this begin. Is it the tournament organizers who are starting, and what is the business model of the starting point? It doesn't sound like brand marketplace is your starting point. Your starting point is ticket sales.
Ticket sales, correct.
Yeah. So then what do you need on the platform to start that ticket sale business? What is the MVP? How quickly can people start to transact? And what, are these tournament organizers only paying commissions, or is there a SaaS element to it to manage their work? Because we have done actually a tournament organizer business in cricket before, which was a SaaS and then commissions. So what they found is that the cricket leagues, needed software to manage those leagues. And then there was the marketing and ticket sales and so on top of that. So I guess the question that you have not talked about is there also a software as a service element to it? So
there are already many platforms which exist where like any tournament operator can go and create the tournaments, but they don't provide any solution. It's just the player management or tournament management platforms are there, but there is no ecosystem through which these tournament platforms are helping tournament operators to monetize or giving them any advantage except like
Are you
software as
sure
a
about
service.
that?
Yeah.
I don't think so, because I have that's a category where through the lens of this cricket league manager that we saw, is that their vision was to do that whole spectrum as well.
Yeah, so but in esports there are already there are tournaments which are happening, like operators are using different platforms like tournament.com, Challenger Mode, Chalonge. There are like couple of platforms at a global level which are present and which have all the games can be supported. They have like few free versions, then few paid versions. After maybe 5 tournaments, they start charging for that.
So what you're saying is you don't want to do that part. That the gist of
That's
this
already solved.
that's
Yeah, I
not
don't
what
want to reinvent
that's
the
not the
wheel.
part that you're doing. So
That's the starting point, but we are going a step ahead and telling them if you want to monetize, they can they can enable betting on our platform, through which there could be more fan engagement, there could be more players engagement, verified tournaments can take place
the
using
ticket
block.
sales is not your primary business.
Ticket sale will be the primary business.
But you're saying betting is your primary business.
Yeah, so whosoever buys the betting ticket, so we charge the commission out of that.
Betting ticket.
Betting ticket, yeah,
Betting ticket,
correct.
not ticket sales.
Betting ticket sales, yeah, but
There's a difference, right? But so if your business is primarily a betting business, then you pitch it like that. Because, I'm listening to your pitch for the first time. There are lots of possibilities in this business. There is all this, you talked about tournament organizers, and it sounded like you're talking about selling tickets for those tournaments. It didn't come through that you were talking about betting tickets.
yeah, it's a betting tickets business.
So then from a pitch point of view, that needs to be front and center. Let's go back to your first slide. You see, time-wise, okay. So democratizing esports, it doesn't say anything about betting on this slide. If your primary business model is commissions on betting tickets, on selling betting tickets, there's nothing on this slide about betting. Betting is not even in the conversation. And then you hit people with this very complicated site, which is completely unreadable. That's not a good way to pitch. This slide should not be open, should not be what you open with. If this is your opening slide, you have to go directly into betting. Betting is your business. So explain in the first line, what is this business? And then take out all this stuff. This cannot go in here yet because you haven't established your business model. You haven't established your pricing model. You need to understand the target. You need to explain the target market and then come with a bottom-up TAM analysis. So that's the flow that is missing from an investor pitch. Then there's going to be gap is good. If there's once you explain what you are trying to build and what does the ecosystem look like and what are the gaps in the ecosystem and what gap are you filling, that's something that is useful. But you have to be very focused on the betting infrastructure because that is really what you're focused. That is your business.
Okay, sure.
So, and in that case, I wouldn't start with all this brand and stuff because it sounded like your pitch sounded like you were trying to build a two-sided marketplace to get tournaments to raise sponsorship from brands. That's not what you're trying to do. Okay, so that's my initial feedback. I think you really need to repurpose this pitch. This pitch is not going to get funded. Hold on, I will work with the other two entrepreneurs and then I will open it up for further Q&A. You're very welcome to ask more questions. I will answer as many questions as you want in the next 45 minutes, and I will also explain to you how to use the 1Mby1M program. Okay, we are going to it's out of slides. Just a second, I'm trying to get to the next entrepreneur. Okay. Inflahormony. Goodness. Okay. Yamini, go ahead.
Well, thank you, Shramana, and everybody who is trying to help me here today. I am Yamini Bynagari, a scientist, and have been an executive team leader leading clinical trials globally. I am an expert in science, cardiovascular sciences. That's my expertise. And I have led multifaceted teams, cross-functional teams to bring about healthcare products. I recently exited that company to pursue or bring about personalized medicine, particularly trying to address cardiometabolic health pandemic that that we are in, or maybe epidemic, really. With that, basically Inflahormony, that's how Inflahormony came about, trying to address cardiometabolic diseases. And what we are trying to do at Inflahormony is to address the root cause of cardiometabolic diseases. We want to look at assessing them, more efficiently now with agentic and Gen AI intervene and restore cardiometabolic health. It is going to be driven by culture and powered by AI. Now let's move into facts. Why am I excited about it? It's because 1 in 8 adults are affected by cardiometabolic diseases, which include obesity, diabetes, hypertension, elevated triglycerides, and cholesterol. I'm sure there are many in the room who might vibe with this. And what is even more touching is many of our family members, from who are maybe barely 10 years old to who is 70 years old, are affected by these diseases. 31% of all deaths are because of cardiovascular diseases. And this disease is a very silent killer. It can lead to multifaceted problems. Next slide, please. Which is, number one is it affects all sorts of people, right? With various educational backgrounds, various ethnicities, various age groups, various socioeconomic stances that they have. So there is not one way that you can solve this. It has to be, this is one disease that has to be solved at a personal level. It's not one solution fits all. That's number one. And number two is, people who want to address it, they're often burdened with decision fatigue. There is so much information. There is a new fad diet. There is a new fad exercise regime that goes out there. And even with GLP-1 pills, which are on market trying to address this very disease, not everybody benefits from it, or not at least without the side effects. All of this is very time consuming for people. So they often go on a diet, they give up, or they go on a treatment regimen and they give up. So the struggle is really lifelong. And
let me ask you a question, Yamini.
Yeah, sure.
At what level do you want to address this? Are you talking at a diet level, lifestyle level, clinical level, medical level? What level are we talking about?
It is all, actually. If you can go to my slide number. Yeah, so let's look at the solution here. There we go. So what we are trying to do at Inflahormony is to leverage agentic and Gen AI to build an intelligent health platform that would address the root cause of cardiometabolic disease, which is inflammation, hormonal imbalance. We want to tailor the solution to each individual by, syncing their wearable data, their calendar, their lifestyle, their cultural choices. We want to design a blueprint, a therapeutic blueprint for them, which would have what kind of diagnostics they would need to receive, what kind of food they should be eating, what kind of exercises would work best for them based on their diagnostic data. So it is taking a human, like a AI medical doctor, going in front of, or having it at disposal of the users, them interacting with the AI doctor, coming up with a validated regimen, which spans from diagnosing them to providing them with both conservative and alternative medicine regimens.
Who
And
pays?
Then,
who pays?
Sorry, who pays? We are hoping to do this. If you want to go to the next slide, next one, please. If you go to my go-to-market strategy, it's actually all the way down. Go-to-market strategy is probably next
Talk
one,
through
please.
it. Who pays? Can you tell me who pays?
Yeah, okay. So there are a couple of ways that we are hoping to get through it. The first is going to be employers. Employers, about anywhere between 100 to 100 and above employees, they are right now spending for health and wellness. There are programs wherein they're trying to get their employees healthy. So it is then providing it to the employers at a cost per employee basis, providing it to them, number one. Number two is insurance providers, insurance companies and hospital providers, physicians. They are trying to maintain their population to keep them healthy. There is a Right now, people are spending about $3,000 for each cardiometabolic event. So the second payer is going to be insurance providers and hospital physician providers. And the third and the most important are going to be the pharmaceutical companies who are manufacturing drugs to treat these diseases. It would give them a therapeutic platform that would allow to keep them on a particular regimen. The problem with people who are trying to treat these diseases is that they never, even those who are on a clinical trial, they don't stick to the regimen. So we want to provide that gamification and reward system that would allow, and a behavioral change that would allow for them to keep this lifestyle for a considerable period of time. So those will be our pairs.
I'm not sure that's going to work.
Okay, may I know? Yeah, sure, please.
I'll tell you why.
Uh-huh.
I don't, maybe corporations are paying on some healthcare, health and wellness platforms. But remember, I asked you this question. What is this? Is this something that you're trying to address at a diet level, lifestyle level, medical level, clinical level? What's, exercise level? What are you trying to address this at? You said all of it. The minute you answer that question by saying all of it, you're saying that you have doctors as part of the solution.
It is going to be AI doctor.
It is going to be AI doctor.
That's correct.
So, and not a human in the loop AI doctor. You're going straight to full AI doctor.
Exactly. Yeah.
So it is essentially an information solution.
It is an information solution and also a behavioral change solution that would reward the change and help them keep up with it. It is I think the differentiator that I would love for you all to appreciate would be the Gen AI piece of this, which would look at somebody's calendar, somebody's movement, somebody's cortisol history, for that matter, like stress levels.
You're answering my question by saying these are lifestyle changes. An AI
No,
doctor,
because, okay, so for instance, how would you know, like you might assume, like you probably have one of those rings and you're saying that, you have high stress. How do you know how that stress is manifesting? Without a diagnostic test being in the loop, which is looking at the cortisol levels, if you don't have that in place, then you cannot say that for sure that that's what is happening. Or how would you even address it?
So here's the rub. You're starting to get to the heart of the problem that I'm leading you towards.
Okay.
The minute it becomes a medical or a clinical solution that requires a prescription, an AI doctor is not allowed to make prescriptions.
Right. Yeah, I'm familiar with that.
So then, how does this work? If an AI doctor is not allowed to make a prescription, then this solution is not viable without a human doctor in the loop. So if you look at, for example, if you look at Blue Shield or whatever, some insurance companies, you're talking about insurance companies using this as a supplemental solution, online supplemental solution. The insurance companies are using telehealth solutions, but they have a human doctor in the loop who can prescribe medication, tests, antibiotics, whatever. And if you answer my question, is there a human doctor in the loop? If you say no to that, then there is no ability to prescribe anything and no ability for insurers to reimburse anything.
Yeah.
And that makes this unviable.
Yeah. Thank you, Shramana. The examples that I would like to put in front of you in this particular scenario, or places like functional medicine, when you get a chance, please have a look at them. What these places are, Jason Health, what these places are trying to do is, what we need, the first tool that we need to make accessible to these users is an AI doctor at their disposal to tell them that these are the potential tests that they need to get, or this is the potential diagnosis. And the second piece to this is once they say that there is a potential diagnostic test that I need to get, a place for them to go and access these in a format that is approved by CLIA, which governs diagnostics within United States. And there are similar agencies for that in Canada and elsewhere in the world, but let's just talk about United States as a model. What you can now do is work with places like functional medicine, Jason Health, who are all third-party laboratory or diagnostic test providers who have their own medical directors who help them get the tests that they need. These are the basic tests that you're now talking about. Once you get tested, and for instance, functional medicine is actually offering this test at a very reasonable price, which is about $500 for the entire year of unlimited testing, all cardiometabolic related tests, be it inflammation, hormonal imbalance, and whatnot. So you work with places like that, help them receive the tests at a cadence that the person would need to receive, which cannot happen in a regular under a regular umbrella, insurance umbrella that is existing right now. This is a differentiator that Inflahormony is going to bring about. So then they get the test.
See, the problem I have with what you're proposing to do is that you want the consumer to become fully responsible for their own health without a doctor at the loop.
No, so that's exactly why, no, this is going to be there. We are saying that physicians are going to use this to manage their patients. So this is in a nutshell. Yeah, physicians are actually.
If you go with that proposition, then you have to prove that physicians are willing to do that. We recently had our primary care physician for dinner, and the amount of resistance there is in general practitioners.
Yeah.
And I've talked to a lot of doctors actually. There's tremendous resistance.
Yeah.
In using AI doctors.
Yeah.
So they don't think of AI doctors as potentially augmenting them. They think of AI doctors replacing them. And so getting adoption is going to be really hard. I'm going to give you something else to look at. I have to move to the next presenter, but I'm going to give you something to look at. There is a company called MIDI Health. You should look at MIDI Health, and I think it's MIDI Health. The founder's name is Joanna Strober. And she started with a parallel hypothesis to yours of an underserved segment, medically underserved segment, which is menopausal and postmenopausal women. And they created a lot of this, content and, ability to help these kinds of women. But the conclusion they came to is that the best way for them to operate is as a telesales company that has physician in the loop and gets reimbursed by insurance. And if you follow their trajectory, what has happened is that these women have developed a relationship with the physicians on MIDI Health, and that those physicians have become their primary care physicians. And it is insurance covered. So in your category, there's a particular clinic at Stanford Hospital led by a doctor called Rajesh Das. His premise is that South Asian patients have a higher percentage, higher probability of cardiovascular, cardiometabolic diseases. And what you're proposing to do, his clinic does that for South Asian patients, and because of that higher risk of diabetes and high cholesterol, etc., but it's all within the general system, accepted prevalent system of insurance covered medicine. There's a doctor who's providing that service that is covered by insurance. So it sounds like this is a concept stage venture, right?
We are building the MVP right now. We have validated we have proof of concept for agentic AI piece, and
You
Gen
don't have
AI
any proof
piece.
of concept because you don't know who's going to pay for it. If you told me that you have 10 corporations that are ready to buy your product and roll it out to their 10,000 employees each, that would be validation.
Got it.
But
Market validation.
You're
Got
by
it.
and large a concept stage venture that has not been validated yet. So
Okay.
stop
Mhm.
and rethink what is the business you're building and what is the business model that allows you to do this business. So
Okay.
go study MIDI health. And that may be what you want to do in the cardiometabolic category.
I see. Okay.
So that may be the best comparable for what you're trying to do.
Okay.
All right.
Thank
We
you.
can talk more after I'm done with the next, and I'm absolutely in full empathy with Venkat, who's wide awake with coffee in the middle of his night in Australia. Go ahead, Venkat. Thank you for waiting.
Thank you. Sorry. Thank you. Thanks for having me at such short notice. I only came to know about 1M1M like 36 hours ago, and I thought
36 hours
let
ago.
me
How did you
just
come to know about 1Mby1M?
through word of mouth referral. So somebody who's been on not on the panel, but as a participant, like as an attendee. So
Great.
who lives in the California area. So I was like, yeah, why not? Yeah, just give it a shot. Just quickly tell us, next slide, please. We will try and address what we're trying to build and who we are, maybe. So we're a bunch of tech entrepreneurs. So we've sort of we're all over 45, or almost there.
That's
So
not a problem
we've
at all.
seen that's no. So the reason I bring up age is we've seen the .com era. We've seen the social media era. We've seen the SaaS era. We've seen the crypto era.
Yeah.
We're now seeing the AI era, ML era, and AI era. So we've tried multiple projects which has never taken off, and we had all these crazy little ideas of solving real world problems. We are at a stage where the co-founders, we all own small businesses. We're all IT people, proper tech people, but we also own small businesses. So I run a restaurant. A co-founder owns a pizza shop. So we're trying to pull in AI's capabilities and try and solve real world problems for real world business owners like us. So that's probably our pitch in a line. I know we're talking about Gen AI, AGI, and for all of that to hit a common, small, medium business owner like me, it'll take ages. And I think
Not
enterprise
ages,
is
but it'll
where
take some time. It's not there yet. That's right.
it'll take some time. Yeah. When I say ages, maybe a year or two, right? So what we're trying to do is try and build agents that are not, super smart, that are not, trying to solve, health problems, but we try and build purpose agents that can actually work, vertically for a specific business that can actually gather and augment domain knowledge that is specific to a business. What we have tried so far. Next slide, please. What we have tried so far is, thank you. So our focus has been on using voice with reasoning abilities with an LLM at the bottom of our tech stack. So we've built a horizontal layer, a framework that we can now apply to whatever basic use case that a specific business owner has. So in probably the slides are not in the right order, but I'm talking about the products that we're building now. So we've got products that are built for QSRs, quick service restaurants, like what I run in the evenings. We also
when
have
you say
agents
you have
that
products
can.
that are built for blah blah blah, is it products for customers or just products in your lab?
Product customers. So the order
So
taking.
you've done services projects for these customers and built custom agents for them, yeah?
Yes, yes. We don't have any paying customers as yet, but we have customers that are trialing our products with us and helping us augment the features of those agents. Case in hand, examples would be we've got the restaurant agent that is live in my restaurant taking real world orders for about 3 months
So you don't
now.
have real customers yet?
We have real customers, but not paying customers. So we're working with a law firm as another example. So we're building a custom, purpose built agent for the law firm that will take care of their day-to-day operations, both internal facing and external facing. So it takes phone calls,
And they don't pay
answers.
you. You're building all this and they don't pay you.
So we've got MVPs, and we're trying to, build features on top of these agents. So they're on a trial phase for about 2 months. I think July 20th is the deadline for the legal firm. We're also working with a psychologist. We're also working with a dental practice. We haven't deployed the agents there, but we're still building the agent.
First thing you should not do is build so many products. This is spreading yourself incredibly thin. No business succeeds if you spread yourself that thin. It's fundamental fallacy in how you're going about doing this. You should pick one, go get 50 customers for that, and figure out a quick proof of concept so that you can start charging them. One, you do not do 7 diverse agents in diverse markets, none of which are paying. That is a flawed way to build business. I would say that's my only feedback to you right now.
Yeah, now point taken. I think we've been advised on similar lines, pretty much, everyone that we speak to.
And you're ignoring everyone who's saying that to you.
Probably not, not ignoring, but we're trying to file the golden nugget. So we're trying to, go for. So what has actually happened is one of the first few products.
I'll tell you what to do. If you have 7 different irons in the fire, in 1M by 1M, we have a very structured way of validating ideas. It sounds like you have 7 ideas that you are tinkering with. I would like you to put all 7 through the process, and you will very quickly figure out, if you run our process on your 7 ideas, you'll figure out which one to go after. I'm absolutely confident that I can get you there. No problem.
Yeah, I appreciate that, and happy to work with you on that. Definitely. If I might just add, so one of the first agents that we built, which was the agent for a restaurant taking orders, passing the docket onto the printer in the kitchen. So we've got some traction from a global QSR chain in Australia to trial it across their 1,400 stores. So we're working with them. We are in pretty final stages of traction. We have verbal commitment from them to deploy that agent across 4 stores as a pilot.
This is sounding promising. And what is the pilot?
Yeah, so,
what do you have to deliver in that pilot to start getting paid?
An order taking agent, and we've already built the pilot. So, we built the agent. We've got to integrate with their backend services, their POS, their order management system, etc. So the discussion is at the CIO level now, but they verbally agreed to a 4-store pilot. But so we'd probably need to work probably a month or so to get the integration done. So but they haven't really signed anything yet, but they're pretty upbeat about it. They want to be seen as the innovator in the voice AI market.
Instead of chasing 7 different verticals, you should double down on this one and go find another 50 clients like this one and start working on this one. If this is your best performing customer engagement.
Yeah, but by far, yes.
Then that's where you need to double down. So I don't waste time on 7 different verticals. Okay, we will take more questions in just a moment. As you can see, I am extremely blunt. I'm telling you exactly what I see, and I'm telling you with no sugarcoating. I'm asking you to really change your minds and change your trajectories and directions about what you're going to build. I'm asking you to consider completely different business models, discarding huge amount of work that you've already done. And that's really not easy to get your head around, right? It's, you've done a lot of work. You're meeting me today. Today is June 26th, 2025. You have your entire personal history. You've done all this stuff, and you're doing 7 different projects here. You're doing, blah here and blah there. And now I'm asking you, okay, take this thing out. This is your jewel. Figure out how to take this to market, discard all this other thing. This is not easy to digest. So give yourself a pat on the back for even listening and not reacting defensively. Okay, so let me explain to you how to use 1Mby1M. And if you want to join the program and work within the program, I'll be happy to work with you. It's a virtual accelerator. Everything is within 1Mby1M.com. The premium program is the full acceleration program where you get on a weekly basis strategy consulting help, which is the kind of consulting we're doing here. When you are ready, when I consider you fundable, we make investor introductions. We work with hundreds of investors, so we have a very strong investor network. But most people who come to me are not ready to be introduced to investors. And that's the work. The real work is actually getting them ready. That's the acceleration work. That is the strategic work that we do. And in that, a big part is the actionable curriculum. None of you have been able to answer the question about what is your bottom-up TAM. All of you need to learn what is your bottom-up TAM. That is one of the essential conversations that any investor is going to want to have with you. And if you do not have an answer to what is your bottom-up TAM, that is a problem. So anyway, it's a 1-year annual membership fee-based program, and some people stay for 3 years because, business building takes time. And once we build a relationship and we can iterate and make progress, people often stay for many years. You can also access the curriculum. That's a fine way to dip your toes into 1M by just the curriculum. 1M basic, that's fine. And then so go to the website, look at premium, basic, and decide how you want to engage with the program. We do get requests for one-on-one consulting. That is much more expensive. You don't necessarily need it, but those who are obsessed about stealth and privacy and so forth, there is one-on-one consulting available. The free roundtables you can pitch once. After that, if you want to continue to work with me, you have to be in the premium program. But free roundtables, we have all through July. There are 5 roundtables in July. So if you are listening today and thinking of pitching at a later date, there are lots of slots available in July. If you have questions about the program, Irina Patterson is your contact. She's on my team, irina@1mby1m.com. So that is basically a quick overview of 1M. I will take more questions from all of you. Whoever has questions, I'm happy to take more questions, answer more questions, etc. Anybody?
Um,
Go ahead, Parshavv.
So Shamana, just want to understand, don't you work on the equity model or safe model?
We don't take any equity or safe.
Okay, so it's
We
just
don't
like
fund
$1,000.
companies. We do not fund companies.
No, but accelerators work on the equity model because that's where they see the upside.
We are not that kind of an accelerator. There's a whole category of non-equity accelerators out there. We are a non-equity accelerator. We do not invest and we do not work on an equity model.
Okay. So it's the
if you're looking
fee.
for an accelerator that works on an equity model, we are not your solution.
Got it. And you are the one of the so these are the flat fee of $1,000 annually.
That's it. Yes. Everything is built into that. And when you raise money, if you succeed in getting to a fundable state, we will invest you. We will introduce you to investors. They will invest and they will take equity. We will not take equity.
And do you charge success fee on that then?
No, we don't charge any success fee. It's an incredibly affordable, founder-friendly model. And it was designed for people who are, the accelerator market, in particular, the 3-month accelerator or limited term accelerator model operates as feeders into the venture capital industry. And they do take very expensive equity. For very little money, they take very, very expensive equity. And they force you to raise follow-on funding. We don't do that. If your business is such that you shouldn't be funded, you can build an organic business. You don't have to, you're not necessarily fundable, but that doesn't mean that you cannot build a business, or maybe you're not fundable yet. That is not a scenario that is preferable for most accelerators. So as such, most of these accelerators like Y Combinator, Techstars, they work on a 98-99% rejection rate basis. We have a 0% rejection rate basis. Anybody can join 1M by1M. It doesn't matter whether you're fundable, if you're idea stage, if you're validation stage, you're pre-idea, pre-revenue, no problem. We will work with you. You may not be fundable. You may not be fundable yet. There's a lot of work that goes on. It takes 18 months often to get a company fundable. Sometimes it takes longer. And we are okay with working with all of those types of situations without taking equity, because equity is only valuable if you can have a huge exit. And that's what the 3-month accelerators, equity accelerators, all equity accelerators operate on that assumption. They operate like venture funds, basically. Venture funds need big exits. Without that, their model doesn't work. That's not our model.
And do you validate before like joining it? Say, for example, I'm a solo founder, maybe a bootstrap founder, any of those criteria, maybe after making the payment or after generally like I faced in few of the other programs.
We are probably historically one of the only accelerators that has always supported bootstrap founders, always supported solo founders, always supported ultralight startups. So none of those are problems for us. We also support bootstrapping with a paycheck. If you haven't quit your job, no accelerator is going to accept you. We would, because we have entrepreneurs who are doing part-time, learning, validating nights and weekends, and then they will quit when they're ready to quit, when they have a validated idea in place. We've also had success stories of entrepreneurs who have gotten to break even in a bootstrapping with a paycheck mode. So we are the most flexible accelerator out there. There's no program like 1M by1M in the market.
Shumana, what does your experience look like in the last, given the market? I do see the fresh funding feeds. Given the market, what does it look like for you? Or what has been your experience with healthcare let's say in the last 2 years? How have you been successful introducing to investors and people actually getting funded? What does it look like?
It all depends on the business.
Mm-hmm.
Healthcare is getting funded. There's no problem with healthcare funding, but you are far from funding. You do not have something that is fundable in the short term. So please do not join 1M by1M with the expectation that you're ready for funding. You're far from funding.
Mm-hmm. Okay. What does your experience look like with pre-seed? So you do not work with pre-seed, seed funding?
We do work with pre-seed, but pre-seed is changing.
Mm-hmm.
When I started my entrepreneurial journey,
mm-hmm.
I started my entrepreneurial journey in the height of the .com in the mid-90s.
Mm-hmm.
Concept financing was possible at the time.
Mm-hmm.
Concept financing is no longer possible unless you are a repeat founder with track record of making money for your investors. Mm-hmm. If you have done this before, if you have been a founder CEO before, and you have succeeded, you have made money for investors, then you can raise money on concept. Even then, investors prefer validated businesses. However, repeat founders have a small possibility that they might be able to get their investors who already know them fund their businesses. But as a first-time founders, if you're just trying to do concept financing and call that pre-seed, you have almost zero chance of getting funded. It is not a question of my not doing pre-seed. This is the industry. So
Okay.
How many people
you do not have the
typically come
resume to
through?
raise. 1 second, Venkat. Yamini, you do not have the resume to raise pre-seed funding on concept. The only kind of funding you would be able to raise is once you validate and you can create a business that investors can bet on, and you have some execution track record. You're not going to get a blank check to do whatever. That's just not going to happen.
I see. Okay. So the story that Y Combinator and other startup funders keep telling is not actually true then.
Y Combinator has a 98 to 99% rejection rate. You can go try to apply for Y Combinator. I can guarantee you're going to be rejected. Y Combinator also has very, specific ways that they find their entrepreneurs.
In your experience lately, have you seen people who are getting funded by Y Combinator, let's say, Shravana, since you say, you have a confidence in those numbers, what have they been? Can you give me some examples of what
Y Combinator has published,
that you worked with?
Y Combinator has published the list of what they're looking to fund. So you can go to their website and look at what they're looking to fund. Got
it. No, I meant to ask, perhaps people whom you had worked with were funded by Y Combinators. That's the question really that I was trying to get to. Were there anybody whom you worked with were funded by Y Combinator or other pre-seed in the last few years? Not recently, no. Okay, thank you. In fact, some of the 1M1M companies who have applied to Y Combinator have been rejected because they haven't done the validation work that I've advised them to do. They think that there is a phenomenon in the industry called accelerator hopping. I advise against it. But that doesn't mean I don't have control over all the entrepreneurs who are accelerator hopping. Just because I ask them not to do it, that doesn't mean that they're going to listen to me. Remember I said, if you disagree with what I say, it's your prerogative to disagree with me. You can do whatever you want. You will do whatever you want. I have no say on how you're going to run your life. So just because I give advice doesn't mean everybody listens to me. So as a result, I have no control over when people get rejected or fail or whatever. Got it. You were asking something, Venkat?
So just typically, how many people come through your program every year? Just curious. That's all.
We don't disclose these numbers.
Okay, fair enough. My second question, probably last one, would be...
We've been in business for 15 years.
Yeah, no, that's cool. All good. Just curious, nothing else. So the QSR chain that we're working with, it obviously has a potential upside. We're talking about a few tens of millions of dollars contract worth for every year. May or may not happen, but we're 90% there, we guess. What would be like a typical go-to investor strategy for my situation? Obviously we haven't thought about funding. We haven't thought about investment.
If you can genuinely prove that this company is going to go with you and you can convert this into a multi-million-dollar deal, that's the beginning of an investor conversation. I can sell that to investors.
So I think what a typical investor or an accelerator like yourself, who might put someone like me in front of an investor, would be looking at is a signed deal, a contract, or something firm. Or...
Something
Um,
firm, yeah, something
Yeah.
something that can tell credibly.
Mm,
You know,
mm,
don't forget that I do this for a living, right? I'm seeing your one deal. I'm seeing hundreds of
yeah.
deals a week, and the VCs are in the same shoes. The VCs are also seeing hundreds of deals a week. So
Mm,
I have, and they have a way of testing what feels real and what doesn't feel real, what's basically vapor.
mm, mm.
And in your case, the minute you put something like this in front of somebody, is like, I have 7 products and 7 different verticals, you're going to be dismissed out of the gate.
Mm.
No one's going to talk to you. No investor is going to talk to you.
Mm.
Because these are the signals that we've all learned to pick up on why companies fail.
Mm, mm, mm.
Now, again, you can discard all my feedback and do exactly whatever you want, but I'm telling you what I know and what the industry knows.
No, that's good feedback. So up until now, we've been like, not thinking about investment at all until this, deal came through. Not a deal quite yet, but now we're
But
thinking,
my advice is
should
to
we
really
go?
play out that deal and figure out,
Yeah.
and if you need help negotiating that deal and how to set it up such that you do get to the kinds of potential that you're trying to get to, that's something we can help you with. I've negotiated a lot of things and helped a lot of people negotiate a lot of things. So that's something we can help you with. Because
Thank
that's
you.
going to be the determining factor. How many, what kind of deals are the underpinning of the market potential that you're getting to. See, VCs are trying to go from $0 to $100 million in 5 to 7 years. This is called blitzscaling. And the problem with these 3-month accelerator models is that if you're starting from scratch and going to an accelerator like Y Combinator, and your starting hypothesis doesn't pan out and you have to pivot within the accelerator, you've basically wasted your chance to meet with the investor network that they could put you in front of. The biggest value that a Y Combinator offers is that investor network. Y Combinator does have a highly prized investor network. And if you go into Y Combinator without a business that is ready to go in front of investors, you would have lost that opportunity. So the best strategy actually, and if you look at the 1Mby1M curriculum, we have case studies of entrepreneurs who have bootstrapped first to viability, to validation, to paying customers even, and then gone to a Y Combinator and successfully raised money. That is a better strategy. And then you get accepted more easily as well, because in that 98, 99% rejection rate, the ones that are already validated are going to rise to the top. They will get into that 1-2% acceptance. They will. That's the kind of companies that will get in. And then there are, they're also investing in some of these, Y Combinator is not only first-time founders. A lot of repeat founders go back to Y Combinator as well, people who have track record and so on. So there are ways to play the Y Combinator game. But overall, this whole game of venture-funded startups is best played by bootstrapping first and raising money later after you have validated. That is a reality. And I've learned that reality in the last 20 years. We have over 1,000 case studies in our program of the who's who of the tech entrepreneurship world. If you're interested in looking at some of those case studies as a, dip your toes, either you can join 1Mby1M Basic, all the case studies are available there, or go to Udemy. For very little money, I have a course on how to build unicorn startups on Udemy, which has, I think, 16 case studies. You will see that same theme come over and over again: bootstrap first, raise money later. Because raising money to blitz scale out of the gate happens much more rarely. You know, people are not going to write, like Meera Murati, whom we were talking about earlier, the CEO of Thinking Machines. She was the chief technology officer of OpenAI. She has been able to raise $2 billion in seed money because she has a very particular resume that the market wants to fund right now. She has walked in with a big chunk of the original OpenAI team. That is a very specific case. None of you have that resume to raise that kind of money. If you did have that resume, you don't need me or any accelerator. You can raise that money yourself. Okay. All right, folks, that's it for today. I will see you next time. Good luck, everybody. I hope you make lots of progress, and please feel free to join the program if you need help, and I'll be happy to work with you. Bye.
Thank you, Shramana.
Thanks, Shramana.
Bye-bye.
Thanks.